Hello, everyone. I'm Dividend Enjoyer. Today I'm going to be doing a stock analysis video on Fiserv, ticker symbol FI. Before we get started on the video, I just want to say that I will be doing a discount cash flow, and I'll have the exact time that I'm doing that discount cash flow on screen if that's the only part that you are interested in. If you want to see the core parts of the business, stick around and we're going to go right through that. So, Fiserv currently trades for $208.79 at the time of recording. The stock is up 56.89% year to date. The market cap of Fiserv is $118.78 billion. The PE ratio of Fiserv is 40.28. Fiserv makes its money through three business segments: merchant acceptance, financial technology or fintech, and payments and networks. The merchant acceptance side of the business was 45% of their sales and 40% of their profits last year. And this segment just provides customer acquisition, e-commerce, and other solutions at the point of sales. This unit grew sales 12% and profits 23% last year, which is huge. And they expect merchant acceptance to continue driving growth as years of investment in the Clover payment ecosystem continues to pay off in the form of cross-selling additional services. If you guys don't know, the Clover payment system is essentially that iPad that people will turn around and ask you for tips with. Fiserv owns that entire payment ecosystem, and thus Fiserv is able to profit off of every sale that those companies make. So if smaller businesses or businesses that are using Clover do better, Fiserv also does better. So it's no shock to see that as the pandemics kind of ended and people are able to get back on their feet and make more money, and a lot of these things are getting a little bit better, Fiserv is making more. And they're also able to learn how to implement the system better and get it into more places for cheaper and make it a better deal so then they can make more money. So it's kind of like a network effect with Clover. The more places that have it, the more money they make, which the better offers they can make, which the more places they can get it into. So as the network grows, Fiserv makes more money. So fintech was 18% of their sales and 16% of their profits. This is just where they process payments, manage cash, and enable the origination of loans for financial institutions. Fintech revenue and profits were flat last year, reflecting a rough environment for banks. So they're helping banks originate loans. Payments and networks, this was 37% of sales and 44% of profits. The core payment processor enables electronic bill payments, internet banking, and credit and debit card payments. This business increased revenue 7% and profits 13%. So Fiserv is essentially doing a lot of these transactions. These sort of financial services is what their company is made of, and that's what their business model is. Now I'm going to read from the 10K annual report. And I like to do this because I like to kind of look at the business in what way could I most easily lose money in this, and then work backwards and say how likely is that. So I like to look at all of the negatives first and then decide how likely those negatives are to happen. So competitive and business risks. We operate in a competitive business environment and may not be able to compete effectively. The markets for our products and services are highly competitive from new and existing competitors. Our principal competitors include other vendors and providers of financial services technology and payment systems. Data processing affiliates of large companies, processing centers owned and operated as user cooperatives, financial institutions, independent sales organizations, ISOs, independent software vendors, payments companies, and payment network operators. So that's a lot of different groups that they're competing with in this ecosystem, I guess, or this market. Our competitors vary in size and in the scope and breadth of the services they offer. Many of our larger existing and potential clients have historically developed their key applications in-house. As a result, we may compete against our existing or potential clients' in-house capabilities. So they're basically saying that they need to continue to offer better, cheaper products and services than what their own customers can even produce, which is very interesting. In addition, we expect that the markets in which we compete will continue to attract new technologies and well-funded competitors, including large technology, telecommunication, media, and other companies not historically in the financial services and payments industries. Startups and international providers of products and services similar to ours. In addition, participants in the financial services, payments, and technology industries may merge, create joint ventures, or engage in other business combinations, alliances, and consolidations that may strengthen their existing products and services or create new products and services that compete with ours. That was a long sentence. They're basically saying that there's going to be a lot of innovation in this space, and they need to be the leader. And I love when a company is so transparent about the risks of the business and how risky this business could be. And it seems like a very difficult business, but it seems like Fiserv is the king right now, or just the biggest, one of the biggest financial services companies. I'm sure PayPal's a big competitor. I'm sure Visa's a big competitor. Even Apple's getting into it, so it's interesting. Anyways, we cannot provide any assurance that we will be able to compete successfully against current or future competitors, or that competitive pressures faced by us in the market in which we operate will not materially and adversely affect our business results of operations and financial condition. If we fail to keep pace with technological change, we could lose clients or have trouble attracting new clients, and our ability to grow may be limited. The markets for our products and services are characterized by constant and rapid technological change, evolving industry standards, frequent introduction of new products and services, and increasing client expectations. Our ability to respond timely to these changes, including by enhancing our current products and services and developing and introducing new products and services, will significantly affect our future success. In addition, the success of certain of our products and services rely, in part, on financial institutions, business partners, and third parties promoting the use or distributing our products and services. If we are unsuccessful in developing, marketing, and selling products or services that gain market acceptance, or if third parties, and then I cut out. So essentially, if they can't keep up with their competitors and develop kind of new technologies, then they will fall behind and they will lose market share, and they may even, be pushed out of the market. It's not a market where you can sit on your laurels and relax. This is a market that is competitive, and everyone's trying to take market share in some type of way, and there's always a new thing coming to disrupt you. So you have to be on your feet. You have to be ready to acquire something that makes strategic sense, and you have to be ready to essentially out-innovate everyone else. And so it's a really interesting market. So here's their strategy from their 10K. Our aspiration is to move money and information in a way that moves the world. Our purpose is to deliver superior value for our clients through leading technology, targeted innovation, and excellence in everything we do. We are focused on operating businesses where we have deep industry expertise that enables us to serve the market with high effectiveness. A strong competitive position currently or via a clear path in the foreseeable future. Long-term, trusted client relationships that are based on recurring services and transactions. Differentiated solutions that deliver value to our clients through integration and innovation. And strong management to execute strategies in a disciplined manner. Consistent with this focus, we continue to operate our business in accordance with the following strategic framework. Client relationship value. We plan to increase the number and breadth of our client relationship by, among other actions, continuing to integrate our products and services, introducing new products and services that are aligned with market needs, combining products and services to deliver enhanced integrated value propositions, and delivering quality service and support for our clients. So they essentially want to both capture more clients by making just a better product and just make their products better overall. Innovation. We seek to be an innovation leader, utilizing our assets and capabilities to be at the forefront of our industry and enable our clients to deliver best-in-class results. So again, they just want to make the best possible product, operational effectiveness. They want to be even more lean, better, and use their size and scale to kind of bully and produce the best product that someone who doesn't have the capital or personnel they have access to can make. Portfolio management. We expect to acquire businesses when we identify a compelling strategic need, such as a product, service, or technology that helps meet client demand, an opportunity to change industry dynamics, a way to achieve business scale that enables competition and operational efficiency, or similar considerations. We expect to divest businesses that are not in line with our market, product, or financial strategies. So they want to acquire other businesses, and they've done this in the past with Clover and with other just smaller fintech companies that they've acquired. They want to essentially take over all of as much of the financial services segment as they can and be just the leader in helping whoever is their client to make money through the internet or through just a fintech channel, if that makes sense, in the financial technology industry. They say at the bottom, servicing the market. The financial technology industry is highly dynamic with new innovations entering the market and driving the expectations of our clients globally. The markets for our solutions have specific needs and requirements with strong emphasis placed by clients on quality, security, service, reliability, and timely introduction of new capabilities and features, flexibility, and value. This requires us to continue our focus on product and service delivery, integration, and innovation to meet and succeed the specific needs of our clients. We believe that our financial strength and specialized market knowledge enable us to support our clients to meet their changing preferences. In addition, we believe that our focus on quality, innovation, client services, and our commitment of substantial resources to training and technical support help us to identify and fulfill the needs of our clients. I also wanted to talk about this. I know the picture is kind of silly, but Frank is leaving for the Social Security Administration. In case you didn't know, he is the Fiserv CEO, and he's going to be joining President Trump's cabinet again as the head of the Social Security Administration. Last year in 2023, he received a total compensation of $27,943,758. And Frank has really grown the company in his tenure, and it's not clear who's going to be next in line. And I just wanted to say, too, Fiserv is growing in a competitive sector. They're obviously one of the big leaders. They have a lot of money to throw around, and there's a lot of growth to be had. And I think if they can grow or even maintain their market share within the financial services industry, I think they can grow significantly better than the S&P and generate a lot of alpha. I think they can use their experience and forward thinking to make the correct acquisitions and to beat the market. I'm now going to go to the DCF valuation portion of the video for the Fiserv stock analysis. Thank you for watching up to this point. $9.13, and I can explain how I got there. So I put in the cash flow for each year, and the average growth was 21.29%, and this is over about 10 years. I do want to say, though, quick sidebar, they haven't reported the last quarter, but so far they are on pace to have grown their earnings by 23% year over year. So I just did it to where it was the last year's earnings multiplied by 1.23. So then they'd get the 23% growth, and this is the number I got. So this is not an official number on this free cash flow for fiscal year 2024 because the year has not technically ended yet. But this is what I'm projecting they're going to be at. Some people are higher, some people are lower. If you guys don't think that's a legitimate free cash flow increase, then I could change it to something else and we can see how that goes. But I have the perpetual growth rate a little bit higher than normal. I think I'm going to change this back to 2.5. And discount rate, I got 7.7 using my CAPM, but other people got 7.99, so I can also try that. And I also just chose this growth rate at 9% because I don't think 21.29 is realistic. But if you do put 21.29 for the next 10 years, you get a value of $530. But I think even 7%, I think 7% is probably low. I think it'd be closer to 9, maybe 8. 8% makes it roughly equal to where it's at now, but I really think 9 is more in line with where they should be at. And these are the projected future cash flows I have here. I do have a dividend discount model, but unfortunately, as you guys can tell, Fiserv does not pay a dividend, so we cannot calculate the intrinsic value using a dividend discount model for the stock. But this is kind of just what I have. I can change this even more too. We can change the growth rate. Let's say they continue this and they are able to grow 12% on average. The stock's worth $280 today then, if you're trying to get into it. If they only grow 11%, stock's worth $261. 10%, $243. I think the best kind of estimate again is probably 9. I think that's the closest, which still means that the stock is undervalued right now. But I think it's very close to where it should be. I don't think you're getting like a crazy good deal because the PE ratio is also so high. And we're not factoring in, all the things I went over with the potential risks of Fiserv stock. So be careful out there, guys. I think this is still a high quality stock. I think they're involved in some really good businesses. And I think the way that they're set up is almost like a network effect where as more people join into the Clover ecosystem or some of their other ecosystems, they make more. And as banks are able to originate more loans, they're going to be using Fiserv to help them do that. And I think that's going to generate more money too that people aren't really pricing in because banks haven't been doing as well. So the fintech side of the business hasn't been doing as well. But I like this stock. I might buy some of this stock based off of this research I've done on it. And I think that there's definitely some value in Fiserv. And I'm going to be interested when they actually report this last quarter to see what the free cash flow is, so then I can do it without this estimate. Because let's say I change this to only be 1.5. Now we're at 212, which is crazily almost exactly where the stock's at. So let me know what you guys think. Let me know if you guys like this format of video. Hit subscribe.